Okay, let's give everybody a minute to join. I see that the attendees are joining as we speak. Nice, the numbers are going up. And let's give them a minute. Okay, I'm starting. So hello, everyone. Thank you for joining us today for the first session of the Anaerobic Digestion Innovation and Business webinar series. I will be the moderator for this session. My name is Nicholas, and I will be facilitating the discussion for the next hour. So quick webinar logistics and rules until we start the discussion. The panelists will give a quick introduction of themselves and the companies they work for, so the participants can understand their viewpoint and the experience, their experience in the industry. Following the introductions and presentations, I will start with a roundtable discussion on the most frequent questions on the subject. Participants can ask questions using the Q&A button at the bottom of your screens. If you check at the bottom of your screen, there is a Q&A button. You can click there, you can ask a question, and the panelists will be answering the questions at the last part of the webinar. The contact information of the panelists will be provided on the following day, so tomorrow. So you can ask the rest questions if you're interested in their work. If you want to talk to them about a project that you have, feel free to email them directly and discuss about a project. So a quick word about this webinar. This webinar series was created to bring together professionals from the biogas industry in order to discuss key interest topics in the industry and present solutions to issues that many are facing from all sides of the industry. Biogas is a really good industry, but like any other industry, it has problems and it has solutions. Anessa is kindly hosting this webinar series. There are 6 topics to this webinar series. Today's topic is about closing the divide between the biogas investor and the developer. Now, quick introductions. I am with Biogas World. We are a business group. We facilitate projects and we create connections within the biogas industry. Today's panelists come from different sides of the industry. I would like to introduce them very briefly and then allow them to present themselves, their work in the industry and the companies they represent. So today we have Nate Lobier Lewis. He's with Spring Lane Capital. He will be giving feedback from the investor side. Hello, Nate.
Hi.
We have Jason Lee with Whaley Corporation giving feedback on the developer side. Hello, Jason.
Hi.
And we also have Amir Akbari with Anessa. He's bringing his experience providing the software tool for biogas project developers and investors. Hello, Amir.
Hey.
So to start with Nate, if you could please share your screen, talk a little bit about yourself, what it is that you do, and introduce us to your experience.
Okay, 1 second here. Share it. And present. And go back to the beginning. I got ahead of myself here.
That's okay. That's all fine.
Great. So good morning, everyone. And thanks, Jason, Amir, Nicholas, and everyone watching. Real pleasure to be here. As you said, I work for Spring Lane Capital. And I'll give a brief introduction myself. I'm VP Canada, so I manage our Canadian portfolio both on the investor side and mostly on the deal side. So Spring Lane Capital, we're relatively new on the scene, a sustainability-focused fund. We closed last year with $156 million US, a great collection of limited partners, a large Canadian pension fund, the Business Development Bank of Canada, and a number of endowments and family offices and institutions across Canada, US, and Europe. Mm-hmm. And our thesis really is following 2 trends. So one is we believe that that resource efficiency can drive real economic value, and that's a core, so that sustainability thesis can generate real economic returns. And then second, that the world and in clean tech is moving towards a kind of more distributed model. So we focus on financing smaller scale, distributed, repeatable projects, so that resemble kind of larger scale infrastructure projects, but are smaller and thus more challenging to finance. And we do that across water, waste, energy, food, and transport. And in one of those subsectors, RNG, biogas has been a real focus for us because it matches a lot of what we look for there. You can find long-term offtake agreements, you can negotiate feedstock agreements, and it resembles a typical infrastructure project, but often the sizes are much smaller. And so, and I'm taking this very, very, very quickly here because I want to leave lots of time for questions, but feel free to ask me about this or reach out later if you have questions about what it is we exactly do. So again, what we do is we look for investments that resemble larger infrastructure investments, long-term secured cash flows through an offtake agreement or something like that, de-risk construction through an EPC agreement, well-developed project, but smaller. So, 1 million to maybe 30 million of CapEx, and we invest project equity, which can be supplemented with debt from kind of more traditional debt providers. And we try to create a project pool for developers. So it really gives them the ability to, and the runway to scale whatever it is they're trying to do. So if they have a pipeline of 5 or 6 projects, we want to do all of those projects. So it provides economies of scale for us and kind of a runway for a developer to grow for them. And then we can couple that with a more venture capital-like investment, so 10 to 15% of our total investment in the corporate entity itself, basically giving the developer runway to develop projects or build their business. We also look at other more flexible ways, such as development expense loans and all this. So we can really provide a holistic package for developers to identify, grow, build, and operate projects. I already mentioned the sectors that we look at: food, water, energy, transport, and waste, all with a demonstrable kind of sustainability edge. And then finally, what we look for and where we dig in. We look for strong teams, interesting technology, contracted agreements, a good project pipeline, and then an interesting market, and of course impact on the sustainability side. I think the last two, RNG and biogas in general, is very interesting to us. So for any developers that are in this sector, we would look for kind of the top 4 boxes checked. And then we really play a hands-on role and identify where there are weaknesses in the developer team and try to work with them to bridge those gaps, whether it's structuring projects, whether it's sales and marketing, whether it's measuring impact or what have you. And we work with our developer teams to make the projects a success. So I'll leave it there and turn it over to Nick to continue the webinar.
Okay, perfect. Thank you very much, Nate. That was a good introduction. Jason, if you would like to go second, please unmute yourself and share your screen.
Unmute. Cool.
There you go.
Could you hear me?
Mm-hmm.
Great. So hello, everyone. It's a great honor to be here. Thank you very much for Nicholas and Amir for the invitation. My name is Jason Lee. I have about 12 years of experience in the renewable energy sector. Most of the part is on the technology side, and then to the past 3 or 4 years, I'm basically transition into the business role. I've been with the Wheelie, Wheelie Group and Wheelie Biogas Solutions business about 3 years now. Before that, I was part of the DuPont Advanced Biofuels team based in both Wilmington, Delaware and Palo Alto, California. So today, I would like to give you a very quick overview about Wheelie Group and Wheelie Biogas Solutions. Okay, let's see. Okay, so Wheelie Group is a German-originated and China-headquartered global environmental technology company. The journey actually started in 2003 with leachate treatment technology. And then in the past about 17 years, we have achieved numerous technology innovation along with IPO and several key M&A which bring us to where we are at today. So right now we are mainly serving 3 business segments. In urban segment, our business include leachate treatment, municipal, food and kitchen waste management, rivers restoration and incineration. In the rural sector, we mainly focus on the agricultural waste management, which, you know, dairy, cow, dairy, swine, poultry manure, and such, through anaerobic digestion. And in industrial sector, our business include energy saving, flue gas treatment, VOC recovery, and industrial wastewater. We have about 1.2 billion US dollars in total asset and about 400 million US dollars annual revenue. So geography-wise, we are operating in China, which is our headquarters, in the Southeast Asia, mainly from Thailand and Europe, mainly from Germany, as well as the Wheeler Corporation here in the States. Globally, we have about 61 subsidiaries across all the business segments that we're serving, have references in 23 countries and a little bit more over 2,000 employees globally. So coming down to the biogas solutions, our biogas portfolio are mainly targeting food waste, livestock manure, and mixed source organics. I mean, driven by the demand in different markets. For example, in Germany, in Europe, we are more focused on mixed source organics. But in the USA, our short-term priority will be on the livestock manure and then the food waste. So with know-how dealing with over 30 types of organic waste and 28 years of service of our biogas portfolio, we have done over 200 reference projects across 13 countries. In the North American market, we are combining our capital and technology strength. We are building in-house project development team. So we want to develop project by ourselves. At the same time, we also work with external originators, so we can make sure and to collaborate with them to bring in more projects and make sure the project is optimized and keep on track from the very early stage. I know that's very critical from the project success and make good return for the investment. So right now we are actually on a invest, build and own and operate model, but we are also committed to provide true turnkey solution to the third-party investment partners. Yeah, that's pretty much. We'll have 4 more slides. I want to give you a very quick show of some of the pictures of our references. This is dairy, a select number of projects. This is one, as you can see, we're mainly target on the CSTR type technology that powered by our in-house engineering team. And the scale of dairy and swine biogas for electricity projects, it could be anywhere from 0.5 megawatts projects all the way to 6, 7, 8 megawatts projects. For RNG projects, anywhere from 100 SCFM all the way to about 1,000 SCFM scale. And this is the poultry reference plants. We had technology that can dealing with pure poultry manure and well solve that nitrogen ammonia inhibition problems. And this is the food waste. This is the following. This is the mixed organics. Yep, that's it. I'm looking forward to the discussion.
Perfect. Thank you very much, Jason. If you can unshare your screen, and we'll move on to Amir as the last part of the conversation. Amir, please introduce us to Anessa, what it is that you guys do, and we'll follow up with questions later.
Sure. Good morning, good afternoon, good evening, everyone, wherever you are joining today. I'm happy to be here, and thank you, Nicholas, Jason, and Nate for the arranging this. Uh, we are bringing a different point of view to the table. We are not the project developer or investors. We are enabler for the project developers and investors with our software product. It provides a predictive analytics for these biogas projects that I'll explain it a little bit later. What we have specialized software tool for the biogas project assessment and optimization, and all of our products are equipped with the algorithm and models to predict the states, future states of the projects. And once it's built and operating, how you can optimize to improve the efficiency of these projects only with the data management, not adding any equipment or any hardware to the system. What we are trying to do is avoiding this frustration between the different units of the organization coming from investment side or the technical side, or different stakeholders, investors, the biological, technical people, or the project developers. This is what we are trying to do to bring the transparency for the project developments and for all the stakeholders involved in this project development. As you all may know, for the biogas projects, it's not like the straightforward project development. It's you are, as a project developer or stakeholders, you're dealing with multiple variables that can affect your project significantly. And these are the ones that they are not staying the same from the day one. What we have observed over the couple of years that we are working with the project developers, that the projects start with one set of parameters, one set of variables, but over the time that project evolves, and that those variables are changing and significantly impacting the project's output and the end results. And we are bringing all these variables in one place that users can do all the assessment related to their projects without any issue. This is, we call it an ESA simulation engine, and it provides all these assessments from the feedstock to the process, GHG emission calculation, and financial assessment in one single platform. Essentially, one changes to one input can affect the others, and all you, as a user, you can see all these effects in just a matter of a couple of clicks and using the software. It's essentially is that you are seeing your projects even before building that project. So you have access to simulated projects that you can see and run what if scenarios. What if I change one of my feedstock? What if changing the characteristics of one of feedstock? What if change any of the output, the CHP unit, the RNG cleaner, or even comparing different vendors. So as a project developers, you are looking for that technology that fits to your projects and delivers the success of your project. And this is where we are bringing the value to the table to show the comparison and run the what if scenarios and provide this full assessment of the project development. So as I said, we have a software product. We call it ADA. Excuse me. That's for the assessment of the new projects or retrofitting of the existing projects. And ADA provides quickly, as a project developer or stakeholder or the investor, you can identify which projects is the winner, which project is the loser, and work with those projects that has a higher winning opportunities. It also provides integrated discipline between the different units from the financial, technical, biological group, or different groups that as in the same company and organization that they are working on a projects. Also provides, you can scale up, you can use this process for your goal based on the target goal that the organization has, and also provides a standard process that can be repeated for multiple projects. You heard that Nate was talking about the projects that they are looking at the projects that it's repeatable model. So this is the same kind of mindset here, that it can create a process that can be repeated in multiple projects and multiple project developments. You can run, as I said, easily different sensitivity analysis, and you identify what is the most critical point that I need to take care of my project development. And finally, the results of this assessment is going to be a quickly preparing a package for the due diligence of these investment and getting ready for the investment ready projects. These are some sample reports that you can generate from our tool. I'm not going to go in deep in it, but I just wanted to show you, you can see the results from the different format, graph, table, technical, financial, anything as a user you can have access to it at the end of the assessment. On the operation side, we have another tool, we call it ADO, and that's for the optimization purposes. It provides shows you simple feedstock change can affect your project's profitability. And this provides that how that can changes, how you can manage those changes. It doesn't require any equipment that, as I said, we just work with the data provided by the user. On the optimization goal, you can define different target goal as a user. It's flexible enough to define different targets. Also, it eliminates any costly delays for the feedstock changes. For the operation of the biogas, you may know that there seasonality involves. You have the feedstock is coming from the same source, but the characteristics of these feedstocks are changing. So as a user, you can define different sets of feedstock with different sets of characteristics to make sure that you are looking at the same projects and you're simulating the projects that you are looking at. And also at the end, you'll see a recipe and scheduling of these recipe for your projects and plant operation. These are again some results from the platform. The top left table shows the recipe for the given period. So it's represented in a different format. You can see your output of your projects. Any variables that you are measuring, you can see it here and simulate it here, as well as different table graph format. You can see it. One interesting thing that I like to share with the audience here is just a case study we did with one of our European clients. With only the same equipment, same plant, with only better management of their feedstock. So we didn't change any equipment, we didn't change any feedstock. So they had access to a set of the feedstock. With our product, we've been able to show them they can increase their bottom line, minimum 150,000 euro per year. As I said, as a user of the ADO, you can prioritize if you want to increase your biogas project production or you want to increase the profit. Most of our clients go obviously for the profit, but with that, you can reach more than 180,000, in this case, 180,000 euro per year in the bottom line. We are Canadian-based company based in East Coast in Canada, a province called New Brunswick. But we are serving international market, mainly North America and Europe, and hopefully we are opening to an Asian market as well. You can, if you are interested, you can reach out to me directly or check out our website, nsa.com. And I think what we are doing is the data analytics for the biogas projects. And I will wrap up with just my presentation with this: just wear a mask, wash your hands, so we can survive. Thank you. Nice. Nicholas, back to you.
Nice. Thank you very much. I mean, thank you for the closing one. I know it's something that is on everybody's mind right now. So you know, it's always good to stay safe. So on to the good part. Questions. So the reason we're here all together is because each one of you represents a different side of the industry. You have your experience, you have a different way of seeing things, you have a different opinion. So since I started with Nate, I'll also start the first question with Nate, and then we're going to move to the rest of the panelists. For the attendees, again, feel free to send in the Q&A if you have any questions. They will be answered towards the end of the webinar. So Nate, first question, you mentioned already in your presentation about the projects that you guys do as far as investment goes. What types of AD projects are you usually involved in? So what kind of projects do you guys take on?
Yeah, so I mean, Thanks for the question. And again, happy to be here. So to be perfectly clear, we're a relatively new fund, so we have yet to invest in an AD or a biogas project yet. We have about 3 or 4 platform or developers in our pipeline that we're currently working with. And traditionally, like I said, we look to develop projects that have long-term offtake agreements. And so this is a relatively, I'd say, new occurrence in the biogas industry, where you have big utilities such as in Canada, Energia, Fortis, and probably soon others that are willing to sign long-term purchase agreements for the gas. So that's pivoted our interest towards those types of plants. So we've looked at a number of projects in BC, in Ontario, in Quebec, that are looking to sell into kind of mainline gas grid. Those are interesting because they provide decent risk-adjusted returns, and you have those long-term cash flows. The challenge, and I'm sure we'll get to this a little more, is kind of the flip side of that, and securing the feedstock and optimizing your plant. And so the ones we've looked at have mostly been kind of merchant municipal waste projects. So looking at commercial, industrial, and source separated organics. Challenging sector of the business. The waste industry is somewhat opaque and unfortunately dominated still mostly by groups that are dead set on filling up their landfills, but that's changing quickly, both at the policy level and I think at the company level as well. And so we look to take advantage of that. We've also looked at projects that will sell into the LCFS market in California. And we see that as, we see definitely a different risk profile, given, it's you're taking merchant risk on the gas that you're producing. However, the market for LCFS credits has withstood a pretty big hit to demand during the pandemic, which we think is optimistic. And there's a lot of similar standards in Canada. There's a federal standard. There's one in BC that's currently implemented. The federal one shall be, and other states that are joining in. So we see it as that as an interesting market as well. So hopefully that answers your question.
No, it does. Thank you, Nate. It's nice to see. First of all, I think it's nice to see investment groups coming into the game, because when people who have the money are interested in biogas, they know what they know that we know that you've done your math before you get into the game. You're good at math.
As old saying that money talks. So
exactly,
money drives the industry.
Exactly. Jason, on to you. Same question, if you can. What kind of projects? Because you've showed us you guys have projects all around. You've showed us about the pig, the poultry, the cow projects that you've done. What type of projects are you typically involved in? And if you have any preferred AD plant type that you guys go for?
Sure. So in the North American market right now, our short-term priority definitely will be dairy manure and swine manure, because those two generate the most attractive carbon credit under the LCFS mechanisms program. And there are many, as everyone knows, there are many similar programs are coming on the way. So that's definitely our focus, of course, with RNG as the main product. But at the same time, as compared to RNG, we're also looking to, when the new, if the RFS could launch the ERIN program, then, a lot of biogas to electricity program project will start to make a better sense. And then in addition to dairy and swine manure project, we are also very interested in looking at food waste, but that financially will be a different model. And then the poultry manure, as I introduced in my slide, we had a very unique poultry manure treatment technology. Although I know, given the ammonia inhibition factors, the poultry manure part hasn't been really touched. So that will be a very interesting market to look into as well. Regarding the preferred AD plant type, We are mainly serving this, we're using the CSTR kind of complete mix type of digesters. However, in California markets or place like North Carolina, where there's a lot of lagoon on farm, I mean, we're also actively evaluating whether we can combine CSTR as a primary digester and using cover lagoon as a secondary digester, to optimize to achieve both gas production target as well as trying to save some of the car packs.
Okay, perfect. No, thank you. Thank you very much for this, Jason. Now, Amir, on your side, you guys see the industry from a different point of view. What kind of AD projects do you guys see and coming to you, and what kind of AD plans do you find more easy to work with, or what kind of AD plans do you prefer?
Sure. As it's discussed, for us, it doesn't matter what kind of project is it.
Okay.
So, but we are seeing different trends in different locations. Financial is the driver for these, and as we see in North America, as discussed with Nate and Jason, manure-based projects, because of the higher carbon intensity score credit, is driving the industry these days. Although we are seeing some other trends coming live that mainly looking at the wastewater treatment. So looking at the California alone, there are lots of wastewater plants around there that has higher capacity. The infrastructure is there. There are there are interesting parties looking at to combining the existing infrastructure with the co-digestion plants, so food waste, industrial waste coming to those plants and running, and obviously producing renewable natural gas. That's in the North American context what we are seeing here. In the European context, renewable biomethane and renewable is a hot topic. At the same time, we are seeing a lot of retrofitting of the existing plants. So in Germany, all the feed-in tariff system is coming to the expiry of the 20 years of the feed-in tariff for the electricity production. And we are looking at the converting those existing facility again to the RNG projects, mainly on the agriculture side. That's what is the driver in the European context, but also in the industrial side as well.
Nice. I like how everybody's kind of on the same line, that it depends on the location. So, North American projects are different than European projects, which is something that anybody who has been working in the industry long enough knows, that it totally depends on the location. It totally depends on the situation. Now, a follow-up question on what you just said, Amir. You gave us a presentation of your software and the technology that you guys use. Which stage do you come in when it comes to projects? So do people contact you at the beginning or in the middle, or like you said, as a retrofit when it's the end? What stage do you guys come in?
Mainly on the ADA, which is related to this conversation, we are seeing two groups. One is the very early stage, so either a project developer have access to feedstock, or they have some offtake agreement that they are looking for some feedstock. They are coming to us and they're using our product. On the other side, and that we are involved in that stage. And in another group that we are recently seeing it is that some of the groups that they use their own tool, they use their own system, existing platform they had in their system, but that system is not working for any reason. Either they have seen interest in the scaling up to, instead of doing one project, they are doing 10 projects a year, or as complication in terms of these credits and the financial modeling goals, they are getting more complicated as we see in the trend. So that's the solution we are providing here, that they can use a software tool for that purposes, and we have all those information required for the assessment.
Perfect. Jason, if you could answer the same question, you said that at some point you come in both as investors and as developers. At what stage do you usually get involved when it comes to projects?
Sure. I mean, in the North American market, we want to enter the project as early as possible, even before the LOI is signed. We want to look at the farm in the early stage, determine a lot of characteristics of the farm, the manure, give a quick evaluation about the total return, potential return risks profile of this project. So that's I think that's a sweet spot that we would like to go in. The earlier we come in, the better we feel that we can leverage our experiences to help the project to be further optimized, I would say. In other markets, for example, in Europe, we are mainly serve as EPC, technology equipment procurement service provider, and then we will enter the project once the project is relatively mature stage.
Okay. And Nate, I know a lot of people might be waiting for you to answer this question. When does the money come in, Nate? So when would you be jumping in? So when is the point where an investor says, "Oh, that looks good. You know, I want in on this." So when is the point where the investor will come in?
So in the ideal world, an investor finds a project that nobody else knows, that the developer has not talked to anybody else, has done all the development to a very high standard, has signed an EPC contract, has signed an offtake contract, and we're able to negotiate one-on-one with that developer and do a good deal that works for everybody. Unfortunately, that doesn't exist in real life.
Mm-hmm.
So our strategy has been to try to come in a bit earlier than your average infrastructure investor. So a lot of folks want a full data room, and they'll come in right at the same time as debt or a little bit before, and run their numbers, spend a week or two or a month of hardcore diligence, and then decide yes or no.
Mm-hmm.
And that can also be tied to some sort of competitive process as well. I mean, the developer will be going out to a number of different financial investors. That's the type of situation we try to avoid. I mean, I don't know if I gave that flavor in our presentation, but our goal is to really work with developers, pick developers that we really like, that we think are strong, that have good strategic positioning in the market, have good teams, and then work with them to help them develop a portfolio of projects. So we'll get in a little earlier. We can help them structure EPC contracts and help them structure offtake agreements and give our opinions. That's probably much closer to what a lender will be looking for than what some developers need that. They've never gone through that financing process.
Mm-hmm.
Some don't. And then so we also pick who we try to work with based on what the best mutual relationship can be. So a quick answer to that is usually a little bit earlier than the project is fully baked. We don't want to be sitting around the hoop for 2 years. Well, but sometimes that happens. But we're willing to roll up our sleeves and work a little bit and work with a developer that we like.
Oh, I like this answer because I understand your viewpoint, and I know you can't do all the hand holding, but sometimes a little bit of hand holding and pointing, especially for people who come into the game not fully prepared or not fully experienced in what they're trying to do, maybe a little bit of direction pointing, and this is the path you should take. This is the documents you need to gather with you. Is good. You're the experienced guys, and since I got you. What would be, let's say, the top 5 things, the top 5 metrics you would be looking in a project just to consider them, like just to as an early stage project? So I'm guessing you don't take on anybody. You have some sort of, a checklist of what are the 5 top metrics that you see in a project before you consider taking it on.
Yeah, I mean, I think we generally want the project to be real and to make and to meet our hurdle rate of return, which is around kind of mid-teens kind of IRRs to the investor equity, which I think is pretty market in this regard. And so what does that mean? Depending on the different vertical, it can mean a lot of different things, but generally some line of sight on a real offtake contract. Ideally it's signed, or you have an LOI or something like that, so that. And that's really key for us because that's the driver of the cash flows for the project. In the AD world and the biogas world, I mean, I think feedstock is also really important. So some line of sight on that, something that's more solid or real than just an idea. And then and those are, I think, the 2 principal points in addition to kind of site permitting, all that. I mean, it doesn't have to be completely done, but we want to know that it's well in progress and it's done reasonably well. The things we can work on, are EPC contracts. We can help clean up those feedstock and offtake contracts as well. But there has to be, they have to be most of the way there, I would say, for the project to look really real.
And you, Jason, kind of the same question. I know you're developers. I know you're looking to see that the project is actually feasible. What are the top, let's say, 5 things you check in a project before you guys come in?
Sure. I mean, first of all, I want to acknowledge that I agree with every word that Nick just commented. Promising uptake and very low risk of feedstock supply is the key. One is the source, the other is the cash flow. So that definitely are 2 of the 5 that top in my mind. But after that, I mean, maybe based on from where we are, our point of view is that the reasonable skill of the farm plus the preferred feedstock characteristics are also very important to us. For example, the manure is better to be not too dilute. Otherwise, you are wasting a lot of energy heating up the water and occupy a lot of digester volumes. But given that, I mean, we are looking for opportunity to optimize that feedstock supply, working with farmers. For example, maybe we can find a better way to collect the manure. I don't know. I don't know whether that's possible, but we are actively looking into that direction. Or we need to do some pre-treatment of the manure, maybe do a thin-thick stream separation to do that and make sure that that is okay with the farmer, okay with the local regulations. And also, we want a feasible digestate utilization strategy.
Yes.
Although we are actively working on technology to convert digest into high-value product, liquid, leaf, fertilizer, or solid fertilizer, organic fertilizer, but in the on the other side, I mean, have the size to spray back to the farm is very important. And then I would say is trust farm owner, developer, investor relationship. That's also very important because this is not a project that's going to be there for just 2 years, 3 years. It's 10 years, 20 years. It is a success for every party got involved. So that trust relationship is very important to make a long-term success of the project.
No, thank you, Jason. Amir, quick for you as well. You guys come on different sides, I'm guessing, but what are the top 5, let's say, metrics you're looking for in a project?
We are not looking in terms of the investment or technology providers. We are observing what's happening in the projects, and we want our clients to have a successful projects. I'm not going to talk about the same topics that Nate and Jason talked there. But a couple other points that we see, observe working with the groups is that sometimes we see a lot of too many cooks in the kitchen. That's what we see. So yeah, you have 6, 7 different, which is good, 6, 7 different farmers developing a co-op model project, which works perfectly. But you need one person or one group leading this, and that's something that we are seeing sometimes creating confusion, creating risks for the projects. The other one is the trend that mainly in North American context, what we are saying that is that biogas plants going to operate by themselves. That's not the case. As Jason pointed out, this is a longer term commitment, and this should be working on the different parties. It's not going to be 1 year, 2 years, and it's not going to operate by themselves. It's not that case. We are seeing more complication on the financial side of it. We are seeing more complication on the technology coming in, different feedstock coming in. And so those are the things that we are observing here. And the third one I would put that out, that is the trend. So people are hearing about the lagoon projects all over places, California, CI score, lagoon. But that's not the case. That's not going to be the successful case for everything. It's not going to be a solution for all the projects. Some projects, yes, it's going to work, and it is working right now. But in some cases, it is not going to work. Interestingly, we did one assessment recently comparing the lagoon system with the tank system. In average, it works at 10% increase in the expense. It's more expensive, the tank system with the lagoon system. But on the longer term, you have more challenges that you need to take care of. Environment, the land that being used for the lagoon. You are not taking, as Jason, I think, mentioned about the feedstock coming, you are not taking all those energy content from the feedstock coming in. So in the lagoon system necessarily, depends on the system you have in place. So those are the things that we are seeing, and those are sometimes risky for the projects. We remind our clients about these, and sometimes they listen, sometimes they don't.
Well, thank you. Thank you. This was a really good answer. You actually touched on something else that I wanted to ask. I want to go with two quick questions for everybody. Try to keep it short because I also want to allow time for Q&A. I want other participants to be able to answer their own questions. I can see that you guys are answering live to a couple of other ones. So Amir just talked about also a couple of problems and challenges that they might be facing. When it comes to you, Jason, you see the world from kind of both sides, investor and developer. What is the most challenging part to engage? Because that's primarily the focus of our presentation, is what is the challenge between the investors and project developers? How can this be improved? How can the two sides work better and there will be a better flow between the two?
Oh, sure. So that's a very good question. If I have many answers, but if I only pick one, I think right now is to align the interest and expectation from the investor and developers and technology providers on the same page. In my mind, dairy manure agriculture biogas projects essentially is everyone work together to solve environmental issues, and at the same time maybe provide some sustainable way to grow the modern, the future agriculture practice. Luckily, with those mechanisms, this is a very profitable business right now. But in my mind, no one want to pay very high premium price for energy. It's not that like iPhone, it's not like fancy dining or game. So long-termly, I do see that the parties need to look at, not just look at 3 years, 5 years. We look at 20 years, 30 years. What is the best way to make this project successful and can stand there creating benefits economically, environmentally. I think that's the gap that everyone needs to be realistic and look further down the road.
Perfect, Jason. No, thank you for this. And Nate, when it comes to you as an investor, I get Jason's answer. You know, it all comes down to a really good conversation between the two sides. What would be your wish? How would you say, talking to developers, how can you just improve your relationship between you and them, align your interests and everything? What is the key?
I mean, there's no golden key. I wish there was, and then we would, and if we knew it, we would have the best relationships with all our developer teams, and that would be great. That's not always the case. Developers are specific types of people. You have to be a bit crazy, I think, to look at a manure lagoon or a vacant industrial lot and think in 2-3 years you're going to have it transformed into a working organic waste to RNG facility. What we try to do very early on is I'd say 3 things. So one is we try to structure our agreements with developers so that the remuneration is fair, some upfront compensation, but some carried interest in a project that prioritizes long-term returns so that our interests are really aligned. And I think that's really important. We try to be really straightforward with developers in terms of what we want and what we're solving for. And then finally, we look for teams that are high achieving, but also willing to listen and learn. And we're not saying that we have all the answers, but there are certain things that we have a lot of experience with and that we will need to solve for. And if those things are going to be a constant argument with a developer, it doesn't make for an easy relationship. And then finally, I'll add, we do a lot of work on the front end of assessing developer teams. We have kind of a proprietary process where we interview and kind of identify strengths and weaknesses of the key players, and then and we do that, yes, to see if we like the team, but more to identify strengths and weaknesses so we can know where we need to step in or recommend a new hire or something like that, to really make sure that the team is a high performing one and that we'll work together really well.
Perfect. No, thank you, Nate. Just to go to the Q&A, I see there's two questions right now. The one is kind of technical. It's for Jason about the high nitrogen content on the swine manure. Jason, I'll let you take that maybe with our participant there, more of a direct answer, because it's a little bit of a technical answer. The second one is about carbon credits and how is that implemented in the United States. And so which one? I can let either of our panelists talk about this. I know carbon credits is something that a lot of people are interested in. I just want to answer a couple of important questions that we had from before, and the main topic of our presentation here. Is there indeed a gap between the developers and the investors, and maybe a closing statement from every panelist here? Is there a gap between the two, and how do you remove the risk that the stakeholders take by doing a project? Nate, since you answered last, can you take this? Do you see a gap, and a closing statement by you?
So I mean, a good developer, there won't be much of a gap. But again, that's somewhat of a unicorn, I think, and not to denigrate developers, but it's a tough job, right? And so I think there's definitely a gap, and I think most often it's a psychological one, in that if you've been working on a project and pouring your life savings into developing something for 3 years, and you feel like you're almost there, and you'll feel that what you've done is worth an enormous amount, and it is, because you've poured your life into it. And there's, I think but the developers also have to understand that, us as stewards of investors' money, you might have put $1 million in to develop that plan. We're about to put 25 in, and the risk will have changed, but we still have to protect that investment in the same way that you've protected yours. So again, that I think often is one gap, and the other is around the level of risk mitigation and agreement. So what is needed in terms of an EPC agreement, an O&M agreement, and all those type of things. And I think that often comes down to a financial answer as well. But those things can be bridged by open and honest conversation, and again, structuring compensation, being straightforward, and also structuring compensation that I think is kind of aligns interests. And there'll always be the occasional dust up, and you just have to deal with that. In terms of a closing argument, I think we see a lot of opportunity here. It's a sector that we plan to make a couple of investments over the next 6 months in, and we look to make more. If there's developers listening in, happy to take a look at your projects. I think you're going to share my emails, and happy to just have a discussion about our model. And look forward to hopefully working with a couple of you. And thanks again to everyone for the opportunity to speak.
No, thank you, Nate. Jason, kind of the same question. Since you guys have sometimes both roles, do you ever fight amongst yourselves? The investment department and the developer department. Is there indeed a gap, and a closing argument from you, and how would you remove any issues when it comes to doing projects?
Cool. Should I answer that technical question first?
If you want, you can take it offline, because it's a little bit about swine manure. So sure. I just want to talk about the money here.
Yes. So the way we look at this is there are many moving parts from the project development, from the very beginning to the very end. So our approach is actually, we see that we want to wrap up all the liability into one package that, technically, engineering, contract, financing, making those optimization, improvements, liability in the same package will heavily reduce those markups between each moving parts, and that we hope in the long term will be making a project better and driving the cost down, and hopefully, with the same amount of capital around the industry, we can build more and more projects and eventually benefit every stakeholder. That's the gap I see. Where we are trying to fill. Luckily, we have most of the capabilities of doing that. So, yeah, giving the closing remarks, I just want to say, although we can do a lot of things, but we cannot do everything. So, if there's any project originators want to development capital, want to have a good partner for everything else, that please reach out to me. And also for including investor as Nate, if you need a full package, full turnkey solution, we can talk as well.
Oh, perfect. Thank you, Jason. Amir, same thing with you, please.
Sure.
When it comes to that, do you see indeed a divide between the two sides? How would you remove the risk, and a closing argument from you?
Sure. Just quick to answer one of the QA that the carbon credits asking about the different states. Yes, there are a number of other states but mainly it's California is driving this conversation. I will be happy to have my team or myself available to have the answer to the team. So to the question, but the one thing that I will put out there to short answer to if there is a gap. Yes, there is a gap. And what we are seeing in the industry, there are a lot of money available to invest in the project. And most of these projects most of the investors that we are talking or involving with, they say they are having a hard time finding the right project to invest in. So demand, the money is there, but the good project is not there. So that's the thing. And that's why we are seeing some of these, even technology providers, their role previously was just being a vendor. Now they are becoming investor and originating of these projects. So they are putting their own money to originate the projects, because what they have observed that in the past, project development was, especially in the early stage, not done properly, and that is failing for the project. So they want to involve early on and even generate some projects to be able to have a successful projects. But final answer, I think all of us were talking about the same thing, but the different wording, the transparency between different stakeholders. That's the key for these projects development. You want to be able to have that open communication between different stakeholders. As I said, we have a number of stakeholders involved, too many chefs in the kitchen, and you want to have that open dialogue with all of them to make sure that the project development aligns with the mentality of the investors, the vision of the technology provider, vision of the operators, because this is a long-term game.
Oh, I like your final closing point, and I think I like how our panelists are all on the same page. Just a quick one on the Q&A. The webinar is being recorded, so we'll have the recording at some point. It will be released sometime in the future. We just have to go through the process. And as I mentioned at the beginning of the webinar, you will be receiving, anybody who participated will be receiving an email with the contact details of all the panelists, just so you can answer questions directly. For the two technical questions that were in the Q&A, they will be answered by the panelists in person in your emails. They were a little bit technical, but if I get to the bottom line here, I think good communication between all sides when it comes to a project, making sure that the developer has his ducks in a row and he knows what he's talking about. That will make an attractive opportunity for Nate to look in, that all the paperwork is there, all the pre-work has been done. And like Amir said and Jason said, good communication. I think good communication between all parties is what we need. So now just to end on that closing point for me, all the participants will have the contact details of the panelists. So let's continue the communication. Let's continue talking. Let's bring more projects in the market. As Samir said, as Jason said, as Nate said, there are projects there. There's money there. Biogas is a really good technology. It's viable. It's profitable. So Hopefully, we're going to be seeing more projects within 2021. I know 2020 was a really upset year. Thank you, everybody, for joining. Thank you for participating in this quick webinar when it comes to the gap between the developers and investors. We have another webinar on December 17th with a different topic. Please feel free to join that again. If you would like to send your questions beforehand, just send them over. I'll make sure to ask them during the webinar. Thank you, everybody. Thank you, Jason. Thank you, Nate. Thank you, Amir. Thank you so much for participating. Thank you, everybody, for joining and listening to us today. And let's continue the conversation offline.
Thank you for
Thank you
involving
very
Have a
much.
great day, everybody, and stay safe.
Stay safe.
Thank you.